In this video, we'll be going over IRS Form 941, Employer's Quarterly Federal Tax Return. This tax form is generally required if you employ W-2 wage earners as opposed to independent contractors on IRS Form 1099-NEC, and if you are required to withhold either federal taxes or Social Security and Medicare taxes for those employees. So we do cover a little bit more detail about the filing requirements in our article, which you can find on teachmepersonalfinance.com. If you type in IRS Form 941, our article should appear. So if you need to know specifics about whether or not you need to file the form, how to file the form, all of that information is contained under the filing considerations portion of that article. So in this video, we're simply going to go through the form itself. It's 2 pages, but it can have a little bit of complexity. So we're going to break this down so that you can better understand it. As I quickly outlined, there are 5 parts. Part 1 basically contains information about your employees, your compensation, how much taxes you calculated, so on and so forth. Part 2 talks about your deposit schedule. Part 3 asks specific questions about the nature of your business. Part 4 request permission to speak with a third-party designee about your taxes, and then Part 5 contains the signature fields. So we're gonna go over each of those just a moment. At the very top is information about yourself, your company, and your tax returns. So let's go ahead and start with that. At the very top, we're going to enter our employer identification number. If you have one, then that's what you would enter. If you don't have one, you can apply for one either through the IRS website or by filing Form SS4, which is the application for an employer identification number. And during this video, I'll be mentioning quite a few forms. So if you get caught up in too many form numbers, we'll put links in the show notes to articles and videos that we've created for a lot of the forms mentioned in this video. And if you have any questions, you can always hit me up in the comments section, and I'd be more than happy to see what I can do to help you out. So in the name field, you'll enter the name. So in this case, this is John Doe. He has a company called Doe Enterprises. So the form instructions actually specify if you're a sole proprietor completing this form, then you would put your name as it appears on your EIN application or on your tax return itself, and then your trade name, your company's name, your DBA, whatever it is. If you have a separate name for your entity, then you would put that here. And then your address. So if you change your address, the IRS highly recommends that you update them with your tax records. So one of the best ways to do that is to file IRS Form 8822-B, which is a change of address or responsibility or responsible party form for your business. So we'll put links in the show notes to that as well. If your company is in a foreign country, then you would enter the foreign country name, province or county, and the postal code at the very bottom. And then, of course, over to the right-hand side, we're going to check the appropriate field for which quarter you're reporting. So if you think of your typical calendar year, quarter 1 would be January, February, March. Quarter 2 would be April, May, June. July, August, September would be quarter 3, and then the last quarter would be October, November, and December. So generally, your quarterly federal tax return should be due to the IRS by the end of the following month. In this case, January, February, March reporting would be due at the end of May. The second quarter would be due at the end of July, so on and so forth. That's how that would work. So let's go to part 1, where we will go over the information that John Doe put into his tax return. So in line 1, you'll enter the number of employees that received any wages, tips, or other compensation for the pay period. Specifically on the dates prescribed. For quarter 1, that would be March 12th. Quarter 2, that would be June 12th. Quarter 3, September 12th. So anyone that had received that compensation for the pay period to include up to those dates. So in this case, John Doe has 2 employees, and he's entered the total wages, tips, and other compensation as $100,000 that was reported to him. Based on the employee W-4s, he withheld federal income tax of $15,000. So in line 4, if there are no wages, tips, or other compensation that are subject to Social Security or Medicare tax, you can check the box here. You would skip all of these line 5 items that have to do with Social Security and Medicare tax, and then you would go right down here to the total taxes before adjustments. That's not applicable in this case, so we are going to go through each of these. For lines 5A through 5D, there are 2 columns, primarily because there's a little bit of calculation involved. So I'm going to take a step back and just briefly walk through what happens in a typical employee setting. So most people are aware that Social Security taxes and Medicare taxes come out of their paycheck. What many people may not be aware of is that your employer also has to withhold a similar amount from their profits. So in this case, for Social Security wages, each employee is responsible for 6.2% of their Social Security wages up to the Social Security wage base. So for 2024, that wage base is, I'm going to cheat a little bit and go up to the article really quickly where I wrote that information down, and it is $168,600. So as long as each employee's Social Security wages do not exceed $168,600, then you would withhold 6.2% from their paycheck, and then you would also have to pay an additional 6.2% from your profits in order to pay the full Social Security tax, which is 12.4%. So for Medicare, when we get to that, it's a similar calculation, 1.45% on each side, but there is no limit. There is no wage base for Medicare. So if an employee makes $500,000 in a year, then you would not apply any kind of a wage base or a limitation to the Medicare tax. You would simply calculate it as is. So in this case, line 5A, we've reported $100,000. We multiply that by 12.4%, and we come up with $12,400. Ideally, this would match the total Social Security wages that were reported on each employee's Form W-2 for the if there's the quarterly amount, would factor into that Form W-2. The W-2 actually would be for the entire year, so a good way to do that would be to take the 4 quarters Form 941s, compare those amounts, and those should be identical. So these are not tip employees, so we do not have any tip considerations, but same thing. You would report those separately on line 5B, but you would only apply up to the wage base. And then taxable Medicare wages and tips. So again, the Medicare wages and total is $100,000. We multiply that by 2.9% to arrive at $2,900. And then the instructions state that for any employee who has wages and tips above $200,000, you would have to calculate an additional Medicare tax withholding. So not only, so that is for wages and tips on income above $200,000. So in this case, that $500,000 a year employee would be paying that additional Medicare tax on the additional $300,000. Now, the difference between the additional Medicare tax and regular Medicare is that the employer does not pay an employer's share of the additional Medicare tax. That is a tax only for the employees. So if we had, let's just say that this was $300,000 for one employee, so we would be calculating the tax on additional $100,000. So we would put the $100,000 here, and then we would multiply that by the 0.9%, and we would come up with $900. That's how that would work. I'm going to back that out because that's not applicable in this situation. So we get down to line 5E, and we're going to total all of these amounts from column 2. So again, column 1 is the wages or the tip income. Column 2, which I did not specify earlier, is the after calculation, the amount of tax that you must withhold and remit. So the total of that happens to be $15,300. So in line 5F, there is a line here, kind of sounds weird, section 3121Q, notice and demand. What that means is that the IRS may send a letter to you, a notice that is titled section 3121Q, notice and demand, meaning that the IRS received information that you as the employer may not be privy to. This happens a lot with unreported tips that employees may have reported on IRS form 4137, which is literally the form to report unreported tips to the IRS that were not previously reported to an employer. So if you receive that notice and demand, there's nothing inherently bad about it. It simply says, you may not have been aware of this. We're making you aware of this. There's this tax that you need to pay. And so you would enter that information here only if you had received such a letter. So in this case, John Doe does not have this letter, and we're going to move on to line 6, where we add all of these items. So the $15,000 from line 3, the $15,300 from line 5E, and then if we had anything from line 5F, we would add that too. So I pre-filled this form out and I made some mistakes that I'll be correcting during the rest of this video, so bear with me. Lines 7, 8, and 9 are adjustment figures. So line 7 has to do with rounding of calculations for fractions of a cent when it comes to the Medicare withholding or the Social Security withholding. So if that's applicable, then you would enter any adjustment here, any adjustments for sick pay, and then any adjustments for tips and group term life insurance. In this case, we do not have any, but if this is something that you think may be applicable to you, check out the article and we address it in each of those lines. In line 10, we're going to combine the total taxes after adjustments. And then let's just imagine that in line 11, John Doe's business Doe Enterprises qualified for a small business payroll tax credit for increasing research activities. So you can find this on IRS Form 8974, which helps taxpayers calculate the qualified small business payroll tax credit for increasing research activities. So in this case, John's small business qualified for a $1,000 credit, which reduces the total taxes after adjustments and non-refundable amounts to $29,300. I'm going to make this adjustment as if they paid $30,000. This represents the total deposits for the quarter. It includes any overpayments that were applied from a previous quarter, any overpayments that were applied from an amended either Form 941X, 941X for Puerto Rico company or employers, or a 944X if I did not. So 941, 941X PR, and then 944X, which is the annual return. So in this case, John Doe paid $30,000. We'll walk through the how he did that in part 2. So now that we have the total taxes and the total deposits, we need to calculate whether or not there's a balance due or whether there's an overpayment. So if line 12 is greater than line 13, that means you have a balance due. You would enter that amount in line 14. However, line 13 happens to be greater than line 12 in this case, so we're going to enter the difference of $700 in line 15. Since we entered an amount in line 15, we also have to check whether or not we want this to be applied to the next return or whether we want the IRS to send us a refund. So keep in mind, check one box or the other, don't check both, and then you should always have a number in either line 14 or line 15, but never both. And you may have zeros in both if you paid your exact bill as on schedule. So just keep that in mind, but make sure that you don't have any values in both line 14 and line 15. So in part 2, before we get there, we're going to put the name and the EIN, the employer ID number, at the top of the form. And then in part 2, there are 3 different possibilities. So the first possibility is that line 12 on this tax return is less than $2,500, or line 12 on the prior return was less than $2,500, and you did not incur a $100,000 next day deposit obligation during the current quarter. So basically, we didn't cover that in line 12, but there are certain things that may happen depending on how much your total taxes that you were required to withhold were. There's some considerations in the line 12 instructions about whether or not it was less than or more than $2,500. So in this case, if that amount was less than $2,500, but line 12 on this return is $100,000 or more, then you would have to provide a record of your tax liability. So for a monthly scheduled depositor, you would complete this right here, which we're about to go over. If you're a semi-weekly scheduled depositor, you would do something slightly different, which I'll talk about momentarily. So in this case, let's say that John Doe was a monthly scheduled depositor for the entire quarter. So he broke down his tax liability, which again was an estimated close to $30,000, but it ended up being just shy of that. So he paid $10,000 each month for the full quarter. So that's how we got to that $30,000. Now you can also schedule your deposits semi-weekly, but then you would need to complete Schedule B, of your Form 941. This is the report for your tax liability for semi-weekly scheduled depositors. We're not going to go over that in this video, but if you did that, then you would check this box, you would complete Schedule B, and then you would attach it to your completed Form 941. And then let's go to Part 3. So these are two questions about your business, and neither of them apply to us, but we're going to go over them anyway. So line 17 pertains to a business that may have closed, or if you had to let all your employees go. You're basically checking this box, and then you're entering a final date that you paid wages to your employees. This lets the IRS know that you're not going to be sending any more Forms 941. Then you would attach a statement to your tax return. We do cover a little bit more detail on line 17 in the article. If you're a seasonal employer and you don't have to file a return for every quarter, then you would check this box in line 18. So you don't have to file a return for every quarter. The IRS instructions are explicitly state that they will not follow up with you if you check this box each time that you file it. But the IRS does expect that you should file at least one Form 941 throughout the year. So if you run a pumpkin patch and your busy quarter happens to be October through December, but you don't really have employees for the first 9 months of the year, you would check this, and then you would be okay only filing the form for the October through December quarters. So as long as you're consistently checking this box each time you file Form 941, then you should be okay with the IRS. Part 4 allows you to assign a third-party designee. This could be one of your employees. It could be a tax preparer or some other person, an attorney, whatever it may be. So if you want to allow that person to speak to the IRS, then you would check yes. You would enter that person's name and telephone number, and then that person can come up with a 5-digit PIN. This would allow them to validate their identity with the IRS. In the instructions, we kind of break out that this doesn't give representation rights to the IRS. This really allows someone other than the person listed on this form to give the IRS information that may be missing, answer questions, or clarify issues. But you're not taking a position. You're not committing the company to anything that was not previously reported. So if you have a CFO, for example, or if you had a controller of your company, but you're the owner, you may sign the form, and then you would allow your controller or your CFO to be the third-party designee. If not, it might be your tax preparer. But the form instructions do specify that if you have a paid tax preparer, this should be the name of a particular person, not the tax preparation firm, not a law firm, not a business. It should be a specific person's name and their office number. And then Part 5, you're going to sign this form here, date it under the penalties of perjury, just like with every other tax return. You'll print your name and your title to the side. You'll enter your daytime telephone number here, and then if you're using a paid tax professional, he or she will enter their information here, and they will sign your tax return. So we've got John Doe's tax preparer right here, and so whatever the case may be, that's where we're going to go with that information. So let me scroll back up to the top. There are some considerations about how to pay tax due. IRS Form 941 actually contains a voucher, 941-V. All the way in the back at the bottom in the instructions. This is fairly straightforward. You would enter the EIN of the company, and then you would indicate, let's just say first quarter, and let's say that our line 14 ended up being $1,000. So then you would enter the name, sorry, too many E's. So if you do submit a payment voucher, then you should send it with your Form 941. You should not staple it, either the voucher or the payment. You would also want to make sure that your check or your money order contains the appropriate information. So it should contain IRS Form 941, employer identification number, and the quarter that you're making that payment for. So again, most employers would be filing electronically, and if you file electronically, then you should also pay electronically through the IRS website. So that's about all we have for this video. Again, we go over a little bit more in depth, including frequently asked questions in our article. So you can check out the link in the show notes, or you can go to teachmepersonalfinance.com, type in IRS Form 941, and you'll see the article there. So if you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our channel. And if you have any questions, comments, or if there's another topic that you'd like to see discussed in an upcoming video, please hit me up in the comments section. Thank you very much and have a great day.